Hey traders, Christian from Hertz Tribeca Trade Group with your end of day market recap. And we'll start with the major indices on the day and a little bit of weakness in the morning. I think perfectly normal considering what we've done this week. Also, the Janet Yellen speech. Oftentimes, when you have a meeting, whether it's like the Fed minutes, the Fed decision, a big Janet Yellen speech, you see very little buying that takes place in the morning because there's just a bit of an overhang. So usually, as soon as that speech gets over with, we normally start to see buyers come back in. It just for whatever reason, people just don't want to buy ahead of a little bit of that type of event. But we finished basically flat on the day. No technical damage done at all, really, to the major indices. We got really overbought. On Wednesday. This is like dangerous levels when we start to see the relative strength index on an indice get to be in the high 70s. 80. It just says that it's very extreme of a movement. So we basically just had an inside day on Thursday, like we talked about, and we're still above this 5-period exponential moving average, the yellow line on the charts. Also, you've got the new value area for March. We're above that for S&P. We try to rally a little bit towards the end of the day. These are levels that we put out every morning and we talk about in detail in the trading room pre-market. We basically ran right up into this resistance, which I had talked about in the morning. I said it's always a little bit of a challenge of a day when a lot of the indices and stocks start below value. You're running right into resistance and you need a powerful a lot of buying, a powerful rally to kind of get from the bottom of value through the value to get a rally going. So it becomes a different picture once we kind of start the day above the value areas. But again, that's a whole nother topic. But basically, that's as far as we got to. So no major ramp into the close. I'll just kind of look at Nasdaq, which I think was pretty boring today. That actually did get into the value area for the day. So some progress made there. It looks pretty similar to the S&P. We did finish above value again for the March value area. So the trend is your friend right here. Are we overbought still? Yeah, we're still a little bit overbought. That relative strength index is 73, but I don't see any real reason to kind of to fade the market right here. I think you want to still be selective in taking positions. Small caps were a bit more interesting today. They tried to go positive right in the beginning of the day and kind of failed. However, they really didn't go too far down here. This was the beginning of the day. They tried to get going. Just there wasn't really any major buying going on here. And I was kind of watching the lows of the day. We didn't break the lows of the day. So kind of a choppy-ish type day for small caps. Again, you look at this chart, still kind of neutral. I've kind of been itching to take a long in the small caps, but I don't really want to anticipate this. I'd rather let the price action confirm it for me. So until we really get, this is small cap Russell futures, but you can look at this in terms of IWM. Until we really get back above 140 to 13, which I know I'm sacrificing a little bit of price here. I could basically start saying, if I really wanted to push it and say, hey, we're above the 20-period exponential moving average, we're still in an uptrend in IWM, I'd rather be a little bit late and really waiting for that 140.13 break. I almost put on a long position on Wednesday. I just didn't like how we closed, and I think that was the smart thing to do for now. So that's something that I'll be watching next week. A couple other notes. The VIX. Good night, VIX. VIX is back down. I want to zoom out, not in. VIX is back below 11. So look at the volatility drain out at the end of the day. So all the way down, from a high earlier in the week of 1296. I had mentioned in the room that as soon as we get to around, I used to like to sell VXX call spreads once the VIX got up to about 17 and 18. Right now, the new 13 level is basically the 17 in VIX. Whenever we get up to around that 12, the upper range of 12, right about 13 is a great place, I think, to sell call spreads in the VXX, one of the most flawed instruments that you'll ever see. I don't know why retail likes to trade these VIX instruments, VXX and VIXY and UVXY. These are probably the worst things, unless you're fading them. the mechanics in these, anytime there's a bounce, I think it's a good opportunity to try to fade it. Um, just because the tracking is horrendous on them, but I don't know, for whatever reason, retail seems to be fascinated with them. Okay, so next, Janet Yellen did speak. I wanted to just cover this. There was a comment that I actually responded to. Somebody on Twitter, they were saying, "Oh, I can't believe that the Yellen comments didn't. There wasn't more action in the indices and more action in the market." From her indices. Look, you could tell here by Fed Fund futures, we're pricing in a 94% chance of a Fed hike. So I had said this in the trading room earlier. I said, I don't know what she's going to really say that's going to shock the markets, because we're already pricing in a March rate hike. So the market and this is a good thing. The fact that we're already pricing it in, it's not going to be a shock to the system, considering that we've got a 90% chance. If you watch one of my videos from last week, I was saying one of the issues and one of the things I was scared about, frightened about, not frightened, but I was a little bit worried about, was the Fed Fund futures were pricing in about a 35% chance of an interest rate hike happening in March. So that's been ratcheted up, and the market's been okay with it. So while this has gone up, the market seems to be perfectly okay and comfortable with a March rate hike. We'll see if anything happens once it actually happens, but for now, the market seems to be okay with it. We talked about indices, but let's talk a little bit about sectors today. Nice kind of recovery in financials today. Financials ended up on the day. I didn't really spend too much time talking about them in yesterday's video. I was a little bit worried. Actually, after I shot last night's video, I was looking at some more charts and I was like, ooh, I don't like that financials. Big bearish engulfing candle on Thursday, but we seem to be hanging in there. For now, what I would watch is this gap and basically 2469 with this big bearish engulfing candle that happened on Thursday. So I don't know, obviously we're still in an uptrend. The price is above the 5-period exponential moving average. But keep in mind, just like I mentioned for the indices, watch that top of value 2469. If we start to get into that, that would be your change in trend. Same thing in the regional banks. Regional banks a little bit weaker, actually went down a little bit farther. That's a bigger candle that happened on Thursday, so not much of a retracement. But keep in mind, we really slid pretty heavily on Thursday. What was pretty strong today all day was Biotechs. Biotechs kind of faded on Thursday. They started to go higher, and you ended up having a really ugly looking candle, shooting star candle on Thursday. However, they were okay today, and they had some relative strength, and they kind of grinded higher all day long. Same thing with the IBB ETF. Either one you look at, IBB looks like it's actually a little bit stronger. Finished up about almost 1% there. So this is kind of one of the areas of the market where I think is notable. I think there's some nice strength that's materializing here and building a bit. And if you look at you have to kind of look back at zoom out a little bit, and you can kind of see we're above the 200-day moving average. And now that we're above this level here in IBB, you've got some open road here. So I like this. What else do we see kind of come back a little bit? I didn't talk about the dollar. The dollar was really sold off, down about 80 basis points. So that did get affected by the Yellen speech. We started to see gold and gold miners rally once the dollar becomes weak like that. So we just took out a couple days candles. Everybody was starting to say that the dollar was getting really strong. Well, big move down today, 80 basis points. And when that happens, gold, you saw the gold miners go from low to high today. So GDXJ, man, these things are so volatile. GDXJ came back, and junior gold miners again started the day low. It didn't get above Thursday's big ugly candle. Did not get above the open there, but reclaimed some of the damage done. I still think this is a tough place to be in right now. Once you have a break of the 200-day moving average, kind of hands off for a little bit in this thing, as it looked constructive for about a couple weeks and broke down pretty heavily. We talked about some of the weak excuse me, we talked about a couple of the strong sectors of the day. Weak was retail. Retail, have to kind of, it is what it is with retail right now. It's as soon as this thing starts to rally a bit, you almost want to sell any of the rips in retail right now. It seems like a good place to do it. Yesterday, retail was actually strong all day yesterday, and ended up being the weakest sector of the day, so giving back a lot of those gains. And I think you can, again, continue to analyze. There was an article out on Bloomberg. I don't have it right in front of me, but there was an article about correlations dropping. This is something that we've been talking about in the Tribeca Trade Group trading room for the last, and in our newsletters for the last 2 months, that implied correlations are extremely low right now. What does that mean? It's a stock. It remains a very much an extreme stock pickers market right now. So you have to watch for, keep an eye on these sector rotations, keep an eye on these charts, but stocks are not moving together at all. So this is not one of those markets where I think that you could just own the indices. I think you've got a lot of opportunities in holding individual names because the correlations are so low. So, watching aggressive call activity and aggressive put activity is really, I think, the place to be until volatility picks up. I think that's really the place to be right now. We did catch a couple of interesting orders today. I think the order that everybody was focused on today was this ESV. A lot of these March 10 calls went up. I did get involved in these as a day trade. I also bought stock. I put out a whole bunch of reasons that Tribeca Trade Group members get about why thoughts on ESV. If you're a member of Tribeca Trade Group, we do this analysis all day long. But I actually like the stock, buying the stock better, considering the price of the stock is around $9 or $10 than purchasing, front month calls right now that are going to decay if you don't get a big move. A couple other orders that I thought were interesting. This IONS order, we don't really see a lot of call activity in this particular name, but there was some call activity right at the end of the day. UL, which is UN, started to see a little bit of call buying, small orders. Another order, ON. And there was kind of some chippy orders today. Just ON Semiconductor has been a really nice name. This name is down a little bit. So you're getting a chance on a little bit of a dip here to the 20-period moving average. I did not take this trade. I was waiting. I said, you know what? I don't really want to add a lot of risk on Friday. And it was it was only about 1,300 contracts, and the price was not a lot. And ON Semi, but this is a name that I think to add to your watch list. I've done very well in this name previously. They've had a couple good quarters of earnings, so keep it on your watch list. See if a bigger buyer comes in. Bud really had a nice day. We saw Bud calls flash a couple times in the morning. Visa had a nice order. We started to see a little bit of Apple and Facebook calls in the middle of the day. HPE, this is a name that I got in after earnings. They just have been buying calls on this thing almost every day since that earnings, since that big move down in earnings. So it's been very repetitive in terms of HPE calls. A couple other names, also Western Digital, which I don't have on my list, but Western Digital, same thing. There seems to be Western Digital calls going up almost every day this week, and HPE calls going up this week. So a couple other chippy orders there. There's also some interesting put orders that hit right in the beginning of the day. Nike, some Deutsche Bank puts also traded right around the time that they announced that they might have to do a multi-billion-dollar capital raise. And then there was a little bit of speculation in energy. We talked a bit about energy yesterday, so I'm not going to touch it today. But these both XOP and XLE, two of the three major ETFs that cover the energy space, both resting around the 200-day moving average. So a little bit of speculation, both in single names in energy and as well as in the ETF space. So that's it for today's video. Have a great night and have a great weekend. Thank you for watching.